Many investors are asking a fascinating question right now. Where could Palantir stock realistically be 5 years from today? Over the past several years, Palantir Technologies has undergone a dramatic transformation. What was once primarily known as a data analytics contractor serving the United States Department of Defense has gradually evolved into one of the most advanced artificial intelligence operating systems designed specifically for modern enterprises. This transition has been strategic and deliberate. In the company's earlier years, its core mission centered on helping government agencies process enormous volumes of intelligence and operational data. Its software platforms were built to connect fragmented information sources and turn them into actionable insights for national security and defense operations. That foundation still exists today. But the company has steadily expanded its ambitions far beyond government work. As the global race to deploy artificial intelligence accelerates, the company has repositioned itself as a central player in the enterprise artificial intelligence revolution. Instead of simply offering data analysis tools, its platforms now function as full operating systems capable of integrating artificial intelligence directly into complex real-world workflows across industries. This broader vision became even clearer last summer when Chief Executive Officer Alex Karp shared a bold, long-term objective for the company. According to his strategic outlook, the organization aims to increase its total revenue by 10 times while simultaneously reducing its workforce size. At first glance, this ambition may sound almost unbelievable. A tenfold increase in revenue is an extraordinary target for any technology company. Yet the accelerating adoption of the firm's artificial intelligence platform suggests that the opportunity may not be as unrealistic as it initially appears. The artificial intelligence platform has rapidly become one of the most important components of the company's ecosystem. The software is designed to allow organizations to integrate artificial intelligence tools directly into their operational decision-making processes. Instead of simply analyzing historical data, the system enables artificial intelligence models to interact with real-time operational environments. That difference is critical. Many artificial intelligence tools available today are designed primarily for experimentation or limited use cases. The artificial intelligence platform, however, is designed to function inside complex environments where decisions must be made quickly and accurately. Industries ranging from healthcare to manufacturing are beginning to adopt these capabilities. Hospitals can use artificial intelligence to coordinate patient data, treatment plans, and supply logistics. Global manufacturing networks can use the same technology to optimize production schedules, monitor supply chains, and anticipate disruptions before they occur. To fully understand the company's growth potential, it helps to examine how its business historically developed. For a large portion of its history, the company's revenue growth was driven by contracts with the United States Department of Defense and United States intelligence agencies. These government partnerships allowed the organization to build some of the most sophisticated data integration systems ever created. This relationship continues to play a major role in the company's financial performance. In 2025, the firm secured a major 10-year agreement with the United States Army that could reach a total value of $10 billion over the lifetime of the contract. This agreement alone represents one of the largest software partnerships between the military and a technology provider. During the same year, the company also expanded its relationship with the United States military through the Maven Smart System. That expansion was valued at $795 million and further strengthened the company's role in national defense operations. These deals demonstrate that the government continues to view the company as a trusted technology partner. Government agencies require extremely high security standards, and the company has spent years building the infrastructure necessary to meet those requirements. However, while government contracts remain important, the organization's largest long-term growth opportunity may exist within the corporate world. Corporate executives across nearly every industry are now searching for ways to integrate artificial intelligence into their daily operations. Businesses generate enormous amounts of data every single day, yet much of that information remains scattered across separate systems that cannot easily communicate with one another. The company's platforms are specifically designed to solve this problem. Its software connects multiple data sources into a unified operational environment where artificial intelligence models can analyze information and generate insights in real time. This capability is particularly valuable for large organizations that operate across multiple regions and departments. A multinational logistics company, for example, may need to coordinate shipping data, inventory levels, supplier schedules, and transportation networks simultaneously. Without an integrated system, managing that complexity becomes extremely difficult. That is precisely the kind of challenge that the company's software was built to address. Evidence of this opportunity is already visible in the firm's financial results. In 2025, the United States commercial segment of the business experienced extraordinary expansion. Revenue from this division increased year over year by 109% and reached $1.5 billion. This surge represents one of the fastest growth rates within the enterprise software industry. Management expects the momentum to continue as well. According to the company's outlook, the United States commercial division is expected to expand by at least 115% in 2026. Such growth rates highlight a powerful structural advantage that the company has developed over time. One major advantage involves the increasing demand for secure artificial intelligence systems. Large organizations must ensure that sensitive data remains protected while artificial intelligence models analyze information and generate recommendations. This is particularly important for industries such as healthcare, finance, and defense. The company's long history of working with government agencies has given it extensive experience in building secure data environments. Many of its platforms already hold the security clearances required to operate inside highly sensitive systems. As a result, organizations can deploy the company's software much more quickly than competing platforms that still need to navigate lengthy certification processes. Another major advantage comes from the design of the company's Foundry platform. Foundry allows organizations to construct detailed ontologies. An ontology is essentially a structured map that connects data elements to verified sources of truth within a system. These maps allow users to see how different pieces of information relate to one another. When new data enters the system, the platform automatically integrates it into the existing structure and updates the operational picture in real time. This capability allows decision makers to understand complex systems much more clearly. Instead of manually searching through thousands of data files, executives can visualize the entire operational environment in a single interface. There is also an important competitive dynamic developing within the broader artificial intelligence industry. Several companies offer tools for managing large data sets. Two notable examples include Snowflake and Databricks. Both companies provide powerful platforms for storing and analyzing data. Their tools are widely used by organizations that need to manage large volumes of information efficiently. However, these platforms focus primarily on data storage and analytics rather than full operational artificial intelligence systems. The company's platforms go a step further by allowing artificial intelligence models to interact directly with business workflows. This difference creates a significant barrier for competitors. While many firms can analyze data, far fewer can embed artificial intelligence into the operational core of an organization. As more companies adopt the platform, another powerful phenomenon begins to emerge. This phenomenon is known as a network effect. A network effect occurs when the value of a product increases as more people use it. In this case, as more organizations integrate the company's software into their operations, the ecosystem becomes more powerful and more difficult for competitors to replicate. Customers who begin using the platform often expand their usage over time. A company might initially deploy the system for supply chain analysis, then later extend it into manufacturing optimization, financial forecasting, and customer analytics. Each new application strengthens the relationship between the client and the platform. This expansion creates extremely high switching costs. Once a company integrates the platform deeply into its operations, replacing it with another system becomes extremely complex and expensive. These dynamics help explain why many customers continue renewing their contracts and increasing their spending with the company. Looking ahead, the financial implications of this growth trajectory could be extraordinary. Management currently anticipates approximately $7.2 billion in total revenue during 2026. If the company were to sustain an annual growth rate of 45% from that point forward, total revenue could rise dramatically over the following years. A 45% growth rate may sound aggressive, yet it is actually lower than the company's current expansion pace in certain segments. Under this scenario, the firm's annual revenue could reach approximately $46 billion by the early 2030s. To put that into perspective, the company generated roughly $4.5 billion in revenue during 2025. Reaching $46 billion would represent roughly 10 times that level. Valuation then becomes the next important question. Technology companies are often valued based on their price-to-sales ratio, which compares a company's market value to its total revenue. If investors were willing to assign the company a price-to-sales ratio of 30, the resulting valuation would be enormous. A ratio of 30 would actually represent a discount compared with the company's current valuation multiple, yet it would still place the firm among the most valuable software companies in the world. At that valuation valuation level, the company's total market capitalization could reach approximately $1.2 trillion by the year 2031. Reaching a trillion-dollar valuation would place the company among an elite group of technology giants. Only a handful of companies in history have achieved that milestone. Of course, several factors would need to align for this scenario to unfold. The global economy would need to remain relatively stable. Corporate spending on artificial intelligence would need to continue expanding rapidly, and the company would need to maintain its technological leadership. Nevertheless, the broader trend appears clear. Artificial intelligence is moving from experimental tools into the operational backbone of modern organizations. Companies that provide the infrastructure enabling that transformation could become some of the most valuable businesses in the world. The company appears to be positioning itself at the center of that shift. Its software platforms are designed not merely to analyze data, but to power decision-making across entire enterprises. If artificial intelligence truly becomes the defining technology of the next decade, the company's long-term opportunity could be enormous. Under the right conditions, the idea that Palantir could evolve into a trillion-dollar company within the next several years may not be as far-fetched as it once seemed. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.